Let's talk about why there's a growing sense of optimism surrounding SoFi Technologies and how its upcoming Q3 earnings report might just be the catalyst for a significant stock rally. First off, SoFi is looking pretty strong when it comes to its Q3 earnings. The financial technology company is expected to release an impressive report, possibly even surpassing profit expectations. This is a big deal, as positive earnings reports tend to give a healthy push to stock prices. Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys. One key factor that supports this optimism is SoFi's member growth. This momentum likely continued into Q3. The company has been consistently adding members, which is always a good sign in the world of fintech. More members usually translate to more business and potentially more profits. Next up, we have the resumption of student loan payments. October marked the return of these payments, which is a notable development for SoFi. It means that the company could see a significant boost in profit. Helping people navigate their student loans is one of the things SoFi does. And with these payments kicking in again, it's an opportunity for the company to grow its business and earnings. Furthermore, there's a chance that SoFi Technologies might bump up its guidance for 2023. This isn't something that happens every day. If it does occur, it's a pretty clear indicator that the company is confident about its future performance. That sort of confidence usually resonates well with investors, which could lead to a surge in stock prices. Now, let's talk numbers. The stock's trading at around $7.40, and its price-to-sales ratio is looking much more reasonable. The risk-reward ratio here seems quite promising, which makes this an interesting time to consider SoFi Technologies from an investment perspective. In essence, SoFi Technologies has some exciting prospects on the horizon. With expectations of robust earnings, continued member growth, the return of student loan payments, and the potential for upgraded guidance, there are several factors that could pave the way for a stock rally. Keep an eye out for its Q3 earnings report. It might just be the event that sets things in motion. It transitioned from a sell rating to a hold. What triggered the shift is SoFi Technologies' move closer to GAAP profitability. Essentially, it started to make financial sense, and this shift in fundamentals began to influence investor sentiment in a positive direction. However, the one thing that made me hesitate a bit was SoFi Technologies' relatively high price-to-sales ratio. But there's a twist. This ratio has been shrinking recently, and it's got me thinking that the Fintech might have some substantial surprises up its sleeve in terms of profits. Beating expectations could be the name of the game. Now, let's talk expectations. The market is currently anticipating a loss of around 8 cents per share for SoFi Technologies in the third quarter. We'll get to see how it pans out on October 30th, 2023. What's interesting is that these expectations are somewhere in the middle, not too high, not too low. But here's where it gets exciting. SoFi Technologies has a pretty impressive history of outperforming these expectations. In the last 8 quarters, it managed to surpass these profit predictions 7 out of 8 times. It hit the nail on the head once. On average, it exceeded the expected profits by about $0.026 per share since the third quarter of 2021. Just to add some icing to the cake, after its earnings report in the second quarter of 2023, SoFi Technologies stock took a flying leap. And since then, it's been consolidating quite nicely. What's fueling the optimism? Now here's where things get interesting. The excitement around SoFi Technologies is not just based on its profit potential. It also stems from a few other factors. First off, member growth is looking quite promising. The Fintech has been busy adding new members like there's no tomorrow. In the first half of the year, they welcomed a whole bunch of new folks, and there's no sign that this growth has hit the brakes in the third quarter. If we look back, we can see that SoFi Technologies has been consistently building momentum. In the first half of the year, they welcomed over 1 million new members, and in the second quarter, things really kicked into high gear with nearly 600,000 fresh faces. Over the last year, they've been averaging about 480,000 new members each quarter. If we keep up this pace, SoFi Technologies might just have around 6.72 million members by the end of September. That's pretty impressive. What's even more exciting is that they managed to grow their member base by a whopping 44% last quarter compared to the previous year. If this momentum continues into the third quarter, it could mean some great news for SoFi Technologies, a catalyst in the making. And here's the kicker: student loan payments are back in action. This has the potential to be a catalyst for SoFi Technologies' profitability. Now it's all about visibility. As the dust settles on new student loan borrowings, we could see an even more optimistic outlook for 2023. Now remember, SoFi Technologies has already bumped up its guidance twice this year. With the end of federal aid for student loan borrowers, there's a good chance we might see the third consecutive guidance boost next week. The tables have turned. We're looking at a year that started with a plan for $925 million to $2,000 million in net sales, and now SoFi Technologies is aiming for $974 million to $2,034 million. With student loans back on the agenda, millions of borrowers are back to making payments. This could spark a significant revival in SoFi Technologies' student loan business, which has essentially been in hibernation since the pandemic struck. So here's the scoop. SoFi Technologies is gathering some momentum, and it's all set to reveal its Q3 earnings. Expectations are up, the member base is growing, student loans are back in action, and guidance might get another boost. It's an exciting time, and the fintech world is definitely one to watch right now. SoFi Technologies might just be in for a big moment in the spotlight. All right, let's take a closer look at the numbers. The market has set its sights on $2.02 billion in sales for SoFi this year, marking a robust 31.3% growth compared to the previous year. If we gauge its performance by the price-to-sales (PS) ratio, which is based on 2023 sales, it currently stands at 3.4x. Now, in comparison, you've got some other key players in the fintech arena. Affirm Holdings Inc. is trading at 2.6x sales, while PayPal Holdings Inc. sits at 2.0x sales. Upstart Holdings Inc. has a PS ratio of 3.7x. Affirm Holdings is looking at a 23.1% sales growth in 2023, and PayPal Holdings is forecasting a mere 2% growth. What's intriguing here is that Affirm Holdings is actually anticipating a hefty 37% sales decline. When you combine growth prospects and valuation multiples, SoFi Technologies seems to be offering the best package. The numbers look promising, and it's shaping up to be quite attractive. The potential pitfalls for SoFi Technologies. But, and here's a big but, while SoFi Technologies' stock multiple has certainly scaled back a bit before the third quarter of 2023, it doesn't mean that the stock price can't take a hit if the fintech doesn't live up to expectations. If they disappoint in terms of member growth or their guidance for 2023, it could throw a wrench into things. As of now, the sales multiple makes a lot more sense compared to the period when SoFi's valuation skyrocketed after the second quarter of 2023. The risk-reward equation leading up to the third quarter of 2023 looks quite favorable. The verdict. In just a few days, the curtain will rise, and SoFi Technologies will take center stage with its 3Q23 earnings report. The odds are not just in favor of a profit beat, but the potential for a robust earnings revelation that could breathe new life into the stock. Let's not forget the cherry on top, the revival of student loan payments. This could very well be the catalyst that propels SoFi Technologies' stock to new heights. It's an exciting chapter in the fintech story, and we'll soon find out if it's about to script another success. So, stay tuned, because the stage is set and the next act is just around the corner. One of the key concerns is SoFi's valuation. Some argue that it's undervalued, but I beg to differ. When you compare it to its peers, it doesn't appear particularly cheap. It's essential to consider that the financial services sector is getting more crowded, leading to fiercer competition. The competitive landscape. SoFi positions itself as a comprehensive financial platform offering a range of services from loans to mortgages. While it doesn't directly compete with payment processing giants like PayPal or Block, they share the broader financial services landscape. The graph below showcases various fintech companies, And the common sentiment is that investor appetite in this sector is relatively subdued, with concerns about competing products vying for market share. Slowing growth. 2023 looks set to end on a high note for SoFi. However, there's a consistent message: its growth rates are slowing down. Despite potentially conservative revenue estimates, it's evident that the business is transitioning into a state of slower growth. The question arises, how much are investors willing to pay for a company moving away from its high-growth phase? Valuation metrics. In the past few months, SoFi's multiples have expanded, but it's now dealing with the reality of slowing growth. Businesses like PayPal and MoneyLion are priced at around 8x EBITDA or even less, which raises doubts about SoFi's ability to support its current valuation. The uncertain road to 2024. The financial landscape remains highly competitive, and there's a general sense of caution. The approaching year, 2024, introduces even more uncertainty, particularly regarding SoFi's growth rates and how its valuation multiples might evolve. In conclusion, while SoFi Technologies Inc. presents an intriguing investment case with passionate arguments on both sides, I maintain a bearish stance. The adoption curve and certain aspects show promise, but the overall valuation and the competitive financial services sector give me pause. As we head into 2024, the questions about growth and valuation continue to linger, leaving an air of uncertainty around SoFi Technologies Inc.